Hello, friends. Welcome to Block Bytes. Today is a special day as I present my first interview on this channel. Zakhil Suresh is the CEO of BitSave, a crypto index fund based on the Bloomberg Galaxy Crypto Index. Zakhil has been working as a fund manager for digital assets since 2017 and recently launched BitSave, a platform where global investors can directly invest into their crypto index fund. In this video, I talked to Zakhil about the reason behind creating BitSave and how he believes that it is perhaps the easiest way for retail investors to invest in crypto. Let's get on to it. Hello, welcome to the show, Zakhil. How are you?
Thank you, Manish. I'm doing well. How about you?
Not bad at all. Thanks for joining us. Let's jump straight in. Tell us about what is BitSave and what problem with crypto investing does it address?
Yeah, so BitSave is a platform for crypto mutual funds. So I think traditionally, most people invest into markets through index funds or mutual funds. Like majority of the people that I think most of us know, right? They invest in one way or the other through a mutual fund or or an index fund, primarily because people need a professional assistance, right? I think literally with anything we do in life, we go to professionals for help. So we saw that gap because in crypto, I think even after all these years, people are still going to exchanges and picking individual assets, right? Back in 2017-18, when exchanges came up in India, I think this problem was not this big because the number of listings were very small. Like, for example, I was part of Coinex, which was the largest exchange in India back in 2017-18 time. So when we launched, we just had like 5 listings on the platform. So it was a lot easier for people to come and pick one of the 5, right? Now it's like, I think more than 200, 300, and it's literally difficult for everyone so people come to us saying, okay, which platform, I should go and go to buy crypto. And let's say we direct them to a CoinD6 or a Binance, and the next question next day would be like, okay, now what? Like, which one should I buy, right? And the challenge with this, which one, is that the way crypto have been evolving over time, what looks good today will not look good tomorrow.
Correct.
Right. So that is a major challenge. So even if you tell people, okay, go buy these things, after 3 years, it would be a different narrative, different story altogether. So we looked at how it works in the traditional industry, and then we understood that, okay, index funds are solving this problem because over time, how it works is that, the best projects will anyway be part of the index, and the bad ones will automatically, go out of the index, right? So we primarily focus on passive only products. We're not trying to beat the market in any way. The idea is to be with the market, because crypto itself has grown like 3x or 4x, even in the current levels, right, over the last few years. But we don't see that many people who have made that kind of money. And I think last month I was speaking with one of my friends who works at one of the largest exchange in India. He was telling me over 80% of their users are, the overall portfolio is down, like they're in losses.
Correct.
So that is because people try to trade, try to pick the bottom or whatever. So it's practically not possible. You might do it once or twice, but to do it on consistent basis is extremely difficult. So yeah, it's a passive only, mutual fund platform. Yeah.
Correct. So I think that is interesting because I think you've hit the nail on the head with as far as retail investors trying to even understand what this whole crypto business is all about.
Right.
I think you mentioned the word passive. So I think it will be good to know if there is, what exactly is the difference between index funds and mutual funds, and how have you, structured your product?
Yeah. So mutual funds, I think index fund is a subset of mutual funds. So mutual funds broadly, we can classify them into 2 categories, like passive and active.
Correct.
So typically active funds comes with a higher cost, like, the management fees on a higher side, because your fund manager is trying to beat the market. For example, let's say in India, if Nifty is giving you 20%, the manager is trying to give you more than that net of fees, right? So that is, so basically their expertise, how they see the market, all these things come into play. Passive is where maybe there is a recognized index. For example, we have Nifty 50 in India or S&P 500 in US. So there is an index that is anyway including all the best companies, right, or the best stocks of that particular market. So the job of index funds or passive funds is to track that index as closely as possible, right? So, and since these products are not really trying to beat the market operationally, the cost is a lot lower, right? And which definitely we can pass on to our investors as well. So these are the two. I mean, these are the main two categories that we have now. Like I said, we have enough data from the traditional industry that over long term, let's say if your horizon is more than 10 years or so, 9 out of 10 times index have been performing better than active managers, right? And I think over time what have happened is that the information asymmetry has also sort of come down. What it means is that back in, let's say, 5 years ago or 10 years ago, it was very the money managers had more access to information, like quicker, right? I mean, they used to get information quicker than retail market. But I think right now everyone has the same information at the same time because of how technology have evolved, right? So it has become extremely difficult to beat the indexes, especially in large caps. I think small caps you might still have some opportunity because of insider news or whatever, but I think with large cap it has become extremely difficult. So we were very clear from day one that we don't want to play that game of trying to beat the market. And especially with crypto, I think we have one more challenge, right? It's a 24/7 market. Like at least in stocks, it's like you have like fixed time schedule, you have a weekend off, you have public holidays, but it's very difficult. So when we think long term, like as ourselves as well, right, as fund managers, when we're thinking of the next 20 to 30 years, it should be something that is sustainable for us as well, right? We should be able to do this on a consistent basis for the years to come. So we felt passive is the right way to go. And even if you look at the number of people who have invested in mutual funds, right? I think in India, the largest mutual fund is an SBI Nifty 50 index fund. Even globally also, I think out of top 5, top 4 are index funds only. So because you speak to any money manager, the first point of entry to any market would be an index fund. I mean, that is what they recommend, right? And so at BitSave, we felt, okay, this is the game that we want to play. And again, if you look at how it is structured in the traditional industry, you always have a asset manager, like a fund manager, like an SBI or an HDFC. And then you have the index, which is managed by a separate index provider. For example, let's say if you take SBI Nifty 50 index fund, SBI is your fund manager. So you as an investor deal directly with SBI, right? And then you have the index that is Nifty 50, which is created and managed by NSE. So this is how it is structured. And the same in US also, you have S&P 500, which is the index, and then you have Vanguards and BlackRock creating funds based on that. So we wanted to bring that model to crypto, and we felt these thematic baskets was not really doing that job, right? It's again the startups that are picking the assets that are going to be part of the index. So we shortlisted all the crypto indexes that are available, based on which we can build our products. And Bloomberg's obviously was superior because of a few factors, like they never had they don't select meme tokens as part of the index. And the research is pretty strong for Bloomberg because, I mean, so obviously they also avoid these fundamentally weak projects, wherever they see that there is some sort of additional risk associated, if you hold this particular project as part of the portfolio, they tend to avoid it. So they never selected Luna or an FTX as part of the index. So it's very particularly designed for portfolios, unlike a market weighted index. And one more thing which I personally like about the Bloomberg index is the fact that usually a market weighted index would have like almost 90% of just Bitcoin and Ethereum. Right. So and that leaves very limited scope for other altcoins to have some sort of relevance to your overall portfolio. So what Bloomberg have done is that they've put a 35% cap to each asset. So because of that, Ethereum and Bitcoin comes like 70%, and then you have 30% of other potentially good projects which can which can really enhance the return of the overall portfolio. Right. So, and I think from a retail investor perspective also, you don't want to limit yourself to just Bitcoin and Ethereum. They want some exposure to a Solana or a Matic for that matter, right? So it's well balanced that way. So that's why we decided to go with Bloomberg compared to a few other options that were out there.
Correct.
Yeah.
No, I completely agree. I mean, when I looked at the composition of the index, 35%, as you said, Bitcoin and Ethereum, and then you have Cardano, Chainlink, Solana. So even if you are, I mean, I think, as you said, it's a very balanced portfolio. So it's like, you have large caps, you have mid caps, and then you have small caps as well. And it was particularly interesting for me because I, as a retail investor, I still don't hold Chainlink. I'm very bullish on it, but I'm seeing an index fund actually having Chainlink on it actually told me that, what, I think I should rethink my strategy and I should buy some link tokens. But that is, I mean, which is, as you said, I mean, it's a very balanced fund, and I like that. That's the part I liked about it. Now, I think the main issue is, which you also know about, is the whole regulatory environment that is around crypto. Right. Now we have these index funds, and then we have all the problems that we've seen last year, especially with crypto exchanges going under. Given that environment, I mean, what would you tell a normal retail user who wants to, who likes crypto, for instance, who has probably crossed that threshold and now understands that crypto probably needs to be part of his or her portfolio, but doesn't know how to invest? And how does BitSave protects its users? How do you envisage that?
Yeah, so I think I mean, it's good that you mentioned about the regulatory part. I think it's a risk that it's a risk that the whole ecosystem is taking at this point, right? Not just us as startups. I think even investors at some level are exposing themselves to that risk because, for example, if SEC comes up with something, but it has potentially a chance to have a very bad effect on the market, right? So these things can't be avoided. I still remember in 2018. I was in Mumbai back then working with Coinex. So it was during my commute to work. That is when our finance minister, Arun Jaitley, he said that crypto is not a legal tender in India. So that he said that while I was commuting, and it was like half an hour travel. By the time I reached office, the market had tanked like 20-30%, right? So that is something that we can't avoid. So I think one of the best ways to avoid, or let's say to limit this risk or manage this risk, is by reducing the exposure you have. I think one of the, if someone who's entering the space, it's very important to note that people always look at the upside of crypto without really looking at the downside of crypto. And it's very important that you understand the risk to reward game. I think that is missing with people that come in, because they always see Bitcoin went up this much percent, but at what cost, right? And what was the risk associated with it? Like, at least I think in the last 7 years, Bitcoin has dropped 70% 7 times. So you are, so it very much depends on when you're entering the market, right? So and at the same time, for a fact that you can't time it also. So the only practical way here is to limit the exposure. So at BitSave, we are very clear that whoever comes and speak to us, and we've mentioned it on the platform also, like, don't put more than 10% that you have. So into crypto, not just BitSave, like, keep it limited to 10% to your overall crypto portfolio. So, and anyone who is starting, I think maybe start with like 1 or 2% and see how it is going, and then later figure out, right, whether you want to have more exposure or reduce the exposure, whatever. Because the upside potential is so high, right? So even if you start with a 2% or a 3%, if things play out the right way, it has potential to be like some 20-25% of your portfolio, if things play out well. So you don't really have to be bothered. So don't take a lot of risk. At BitSave, you can also avail a service of a professional investment planner. You can sit down with our professional, tell him about the kind of risk that you're okay with taking, your annual income, things like that, and we're happy to help you with that number. What is the right number? What is the right allocation that you should have on BitSave or crypto overall, right? So that is one thing that people can do. I think another thing, if you see, right, like people buy crypto mainly of two reasons. One is they see value in crypto, and second is they see momentum. So let's say if what happened 2 years was primarily momentum buying, right? Like people saw crypto going up every day, so they sensed an opportunity. There's an opportunity to buy today at whatever price and sell at a higher price, and that's not a sustainable thing. So we see more people investing for the momentum and not really value. So if you remember, soon after FTX collapsed last year, there was a flood. I mean, institution just jumped in. Like there was a very big peak in the institutional money that was flowing in towards the end of last year, because they saw value for crypto at that price, like 15,000 for Bitcoin and around $1,000 for Ethereum. So they stepped in at that point. So I think it's from a retail perspective, you have to start understanding the future scope of a project. And there's a saying, right? Never buy anything at MRP. Always look for a discount. So wait for that discount, and whenever you see that, start jumping in. So it's a very simple thing, right? Like most people buy the top and sell the bottom, and that's a behavioral risk that we've been always seeing with crypto. Now just think if you can do the opposite. It's a lot of mental it's a challenge, I understand, but if you can start training your mind to not follow the larger, the basically not follow the herd, basically, everyone who that is chasing the momentum and all that, but have that patience, have that discipline in your investing. Instead of, if you, let's say if you have 10 lakhs, even 1 lakh for that matter, instead of putting it together, maybe split it into 10 10 lots, and then keep putting money at different times, so that you have a better, maybe probably you get a better pricing. And yeah, things like that is where you can actually try and limit your risk that is associated with crypto. And we can't avoid that risk. I think not just regulatory, right? I mean, there's n number of risks that are associated with crypto, and the only way to mitigate is by limiting the exposure. At BitSave, along with asking people definitely to limit their exposure, from a custody perspective also, we've taken measures like putting from a we store everything in cold storages, and we also have insurance coverage for 100% of the assets that we hold. And since you mentioned about what happened with players like FTX and all that, so I think one of the challenge was the lack of transparency. Now, since you don't have a regulator in place, right, the risk for investors is that there's no one to make sure that the players out there are doing the right things, right? Like I was watching the trial that is going on for the FTX case, and they've been mishandling the customer funds, like using for their investment, personal lifestyle funding and all that, right? And soon after FTX, I think there was this huge demand from especially the Indian community, for exchanges to publish their proof of reserves, because people were scared whether exchanges are holding their money, right? So I think from at BitSave, I think 2 or 3 months into our journey, we published all our wallets saying this is where the funds are stored, and we update it every day. It's not like we do it once in a quarter or once in a month. Like soon after, every single day you buy into our fund, we move it to cold storage and we update it. And we have also went one step ahead, where we are doing our accounting also on chain. So what it means is that you have clear representation of both sides of our balance sheet on blockchain. So I personally don't know about any other startups who have this level of transparency, because we ourselves are investors, right? Like we ourselves think from the perspective of the user. So it's very important that you you make the clients feel secured. And I believe that even if you're putting in 1,000 rupees, it's your hard-earned money, right? You should not be worried about the fact that you put that money into a startup or a app, right? So we have given complete visibility of the funds. You can verify it at any point in time, and whenever we move the funds for rebalancing or whatever, we clearly mention it before we even touch the funds, saying that okay, for this purpose we'll be moving this part of the fund to our hot wallets or exchange wallets. So we have this policy of no unanswered questions. So literally anyone can reach out to us on social media or WhatsApp, Telegram, wherever it is. You can please feel free to ask. I think one of the mistakes that people did over the last few years is they were not asking those questions, right? They were blindly trusting what people were saying and then putting in money and see what happened, right? So please keep asking those questions, and make sure that you feel secured about putting the money in any platform, not just BitSave, but any platform for that matter.
Correct. You've said a lot of interesting things here. And somehow I can't help but make the active and passive analogy here again. So you have, if you will, let me indulge. You have the active ways of protecting your investors by publishing your proof of reserves and liabilities.
Totally, yeah.
And of course, and the insurance that you have on top of it. And also you help the insurers and your users passively by kind of educating them, helping them through this journey of investment into this whole new world of crypto assets. I'm wondering, since you've started now, I know you are very new, but how has the response been? Are you getting people in who are completely new to crypto, or most of the users are already aware of it? How has the mix been, or how would you categorize it?
Yeah, I mean, see, the platform might be new, but we've been doing, primarily three things since 2017.
Okay.
Right? Like, one is helping people buy and sell crypto. Like we were running the largest brokerage firm for crypto before all these exchanges came up in 2017. We were winners of Binance P2P program in 2020 for doing highest volume in India when they launched their P2P.
Yes.
Yeah, right. So that is one thing. Secondly, we've been advising people when to buy, when to sell, all that, and we've been doing a bit of portfolio management as well. So BitSave is basically, a platform where we have put together all these three things in a structured and scalable manner, right? So we already knew that these services were relevant because we had paying customers right from 2017. But the most interesting thing is that I happened to meet a lot of people who had genuine interest in putting money into crypto, but they were just not doing it because they did not understand how these things work, right? So last year, before we finally started building the platform, we spoke to a wide range of people from different backgrounds to understand what their pain points are and challenges are. So and the response is what really motivated us. Finally, okay, let's start building it, because we're primarily traders, and we've never interacted with so much of people, or because and then when you have that kind of a trading background, it's a easy life, right? You sit in a room or wherever in the world you are. So it's a bit of a challenge for us to start, come out of the room and then start building something. But we decided to do it because we felt the ecosystem needs something of this sort, right? And like you mentioned, currently I think around 30 or 35% of the people who have invested on the platform are all the first time crypto investors, because
that is nice.
we're solving the most important problem, right? Like what to buy. That has been the biggest question, literally from the time I remember.
It makes
sense.
sense.
Right. And since it's so easy. Like we have, sometime I used to watch the user journeys, right? Like they sign up, they do the KYC, it would be done in like 3 minutes, and then you can fund the wallet with UPI or an IMPS another 2-3 minutes. And in just couple of extra clicks, you're getting exposure to sort of 70% of the market. Like, the Bloomberg components covers like 70% of the markets, right? So this whole thing happens in like 10-15 minutes, right? So it's very I mean, it's very. I mean, personally, I feel happy when you finally see that, where people have been struggling with asset selection and all that, and finally they are like, okay, this is a product where I'm confident about putting money into crypto. And the point being, it's not just crypto, right? I mean, any market for that matter. Like I was telling you previously, the easiest way for anyone to get in, start with is an index fund. Then that will give you the time to figure out things, how individual things are working. And then maybe if you feel like, okay, you're making money out of it, then you can start allocating some capital into, more riskier options within the same market. So I think, and for crypto to grow as an ecosystem, it's very important that we have this very simple products. Otherwise, people will come in, they'll buy a bunch of things that, maybe influencers or, someone is saying, and when it's not working, they leave. The good thing about these kind of products is that, it helps you stay invested for a long term, right? One of the biggest patterns that we have seen over the years is people coming in, they buy a lot of stuff that are trending. Market goes down, your portfolio is down 90%. In the next cycle, it will be an extremely different narrative. For example, we had NFT metaverse in the last cycle. Probably they won't perform well in the next cycle, right? So your portfolio is already down, and then you will lose the motivation to invest in the whole asset class itself because it will not do well, right? So, but index solves that problem, right? Because index anyway will evolve with how the market and the industry is evolving also all the time. So our goal with BitSave is to help, as much as people to stay invested for long term, and in turn expand the ecosystem. And I believe everyone needs a starting point. Now you can start with BitSave, and tomorrow you don't know, you might end up building something on. I mean to say, the one of our clients, they have the potential to build something on blockchain tomorrow. But what is important is that you take that first step, right? And our goal is to help you with that first step, and later it's up to you. I mean, whether you want to diversify some to, particular projects, whether you want to start participating in ICOs. But I think it's extremely important that we, help people to begin their journey. For example, if no one had helped me, right, to start in 2000, start investing in 2014 or 15, probably I would have. So I come from a finance background. I was doing CA. I'm someone who gave up on my CA career. Like, I did not write my finals because I want to do crypto full time, right? So if I did not have those opportunities, I would have probably completed my CA and then, did something on those lines, right? So it's those simple things that exist out there that will eventually make a lot of difference, right? So yeah, I think from how we have simplified, I think, I mean, sometimes I say this, keeping away the fact that I'm a founder of BitSave, I strongly believe that BitSave is literally the easiest way Indians could have ever invested into crypto, right? So
I would not deny it. The moment I saw your app and I saw the website and everything, it is very easy. Absolutely.
yeah,
I completely agree with that. Yeah.
yeah.
All
So
right.
that is what we're looking forward to. Yeah.
Okay. So, I mean, I think it will be interesting. Now, one thing that popped in my mind is, I mean, of course, as you said, you've been doing this for a long time, but the BitSave platform was created recently. Was it December last year, I believe, that you
So,
started BitSave?
so the plan was, we've been thinking of it for like 2 years, like more than 2 years. I think it was sometime in 2020 that we decided that asset management is what we want to do. We did not jump right in. Instead, we wanted to we wanted to prepare ourselves. So I took up this course called CMT. My co-founder went to Canada to do MS in financial planning. So the plan was to give it 2 years and start building sometime this year, because we wanted to launch it as close to the bottom as possible, so that literally everyone who invests right now, who trust us at this point, right? Because the sentiment is at all-time low. So they would be profitable, in the next run.
Right.
So so that was a plan, but fortunately or unfortunately, when FTX collapsed in November and the market came down to 15K, I mean, the Bitcoin dropped to 15K, we were like, okay, because we knew 15K is sort of the the range that we were looking at for a potential bottom. So when that happened, couple of weeks after that is when we were like, finally, okay, let's start building. So I think the first meeting happened on 26th November 2022. So yeah, the last week of November is when we officially began building BitSave.
Nice. Yeah, I mean, I think you briefly touched on the other question that I had was about the timing. I was thinking that your timing somehow seems to be it clicks. I mean, for me at least, because we are in a bearish environment, and a lot of people are expecting that next year is going to be good for crypto. But this is not financial advice. Obviously, we don't know anything. We don't have a crystal ball. But that is interesting. You mentioned that. I think the last question that I have for you, Zakhil, is, you build this basic platform with a basic product. I'm sure you have some kind of a roadmap. You envisage what all other things that you want to have on it. Can you give us a little bit of an idea of what different products or services you might have in the future?
Right. I think a few things which I can mention is, maybe down the line, you might not have to come to BitSave to subscribe to BitSave products. I think that is something that we are actively looking into, like, closely work with other financial platforms that are offering you, like a range of investment products. So probably if you're a client of that company, you can maybe subscribe to a BitSave product right from that particular platform instead of coming on BitSave. Another thing, maybe a long-term or a mid-term plan, is to start closely working with exchanges, because one of the things that we are doing is tokenizing our funds. Like literally all the units of the funds that we issue, those are actual tokens that we issue on blockchain.
Okay.
So it also gives us an opportunity to list those tokens, on an exchange or something of that sort, right? At the product level, one thing that we are very clear is that we don't want to keep creating funds just for the sake of it. Like that does not, because the more you do it, you're just confusing the user at the end of the day.
Okay.
So we would be creating funds that are, very different from each other. Like you look at two BitSave products, you will really know, let's say what exactly is the difference in terms of how the risk is associated with it,
Right.
the rewards are associated with it. So I can't talk too much about it, but I can tell you about the next one that is coming probably next month. It is a hybrid product.
Okay.
It's a hybrid fund where you have 70% of crypto and 30% of digital gold. So the idea of the product is not really to give people an opportunity to invest in gold, because you already have. But the best part of this product is that with regular rebalancing, right? When the market goes up, your profits get automatically booked from crypto, and it moves to gold, and it will stay protected, because gold is not historically that volatile, compared to crypto, right? So the most of the profits that you make in the bull run, that will automatically get parked in gold, and that will stay there. And in the bear market, when crypto again comes back, that money that you've parked in gold will again start flowing back to crypto, right?
Wow.
So
Okay.
yeah, so you won't believe this, but I was so excited after the backtest, because this was generating more, return than the Bloomberg Index.
Oh my goodness.
altogether, because of this simple reason, right?
Right. Okay.
So I'm personally looking very excited for this one. So that would be the next one that is coming up. Probably the third one would be in only next year, and I think it's too early for me to start speaking about it.
Just as a point to add here, of course, you mentioned on your website that your assets can be redeemed 24/7, so it's not a problem. If you have funds on BitSave, you can go ahead and redeem it, and you will get it back. And that is correct, right? I mean, I'm not misquoting.
Right. It is correct. Of course, there is that window, as in, let's say, I'm pretty sure most of the listeners would be aware of the fact that mutual funds are not really redeemed and
Correct.
subscribed and redeemed real time. There is a
Right.
cutoff time and there's a settlement time, right? So in the case of Bloomberg Index Fund, the subscriptions happen at 1:30 at night, because
Okay.
index follows the US timing. So currently the US market closes at 1:30 a.m. in Indian time. So let's say if you're placing an order right now, it would be executed at 1:30, and then let's say if you're placing a buy order, it will get executed at 1:30. Same for sell order. And so basically, if you're on a sell right now, your BitSave wallets get credited, back in USDT at 1:30, and after that you can immediately withdraw it to your bank or maybe send it to your Binance wallet. So there's no restriction in terms of that.
Lovely. All right, that's all I have. I want to thank you, Zakhil, for your time. It was a pleasure talking to you, looking back at your journey and, the things that you have kept in mind for the retail investor. Of course, I will put all your information in the description, your X account, of the website. So I would suggest everybody or anybody who is watching this video to please go there and check out the website on your own. And as Zakhil said, you can reach out to him if you have any doubts or concern, or to anybody in the team. So
Right.
yeah, thanks again, Zakhil. Good luck, and I hope that you grow and you help
Thank
the
you so
Indian
much.
customers. And I think it's global. It's a global product.
It's a global product. Yeah, it's a global product. Yeah.
Fantastic.
And
All right.
thank you so much for having me. I think it was very lovely to reach out and, have me on your show. Thank you so much for that. Yeah.
Take care then. Have a great day. Bye-bye.
Bye bye.